It was another nice day on Wall Street. The S&P 500 was up about 3/4 of a. We really got a nice shot in the arm towards the end of the day as there was a Wall Street Journal report that the U.S. was considering lifting some tariffs. But unfortunately, they came out after the fact, threw some cold water on the whole story and said, no, that's not the case. Nonetheless, we did still finish with some nice gains. So we'll take a look at that and see what it means for the rest of the sectors out there. In our trade example today, I wanted to focus on the gold market, which has gone through a little bit of an acquisition spree here recently to see if we can uncover some interesting trends. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 17th, 2019. First of all, if you're new, welcome aboard. We're grateful to have you in our audience here today. Remember, you can go to YouTube and subscribe to our channel, and while you're there, make sure you check out our description area where you can sign up for our email distribution list as well. You can also follow David and I on Twitter. My handle is @BrandonVanZee. We would encourage you to click like and retweet if you get value out of these daily videos here whenever you see those Market Outlook tweets floating around. In addition to that, we have a presence on Facebook. Feel free to check out our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into today's analysis. As you can see, I've got chart 4B pulled up here for those of you that are Premium Market Scholars subscribers. As a reminder of what we're looking at, these are four U.S. equity indices here. Each one of the charts are 3 months in length. Each one of the candles are 1 day in length. And when you're looking at the background colors of the charts, it will tell you the periods when you are bullish or bearish. Now, where we stand right now, just like was the case on Tuesday when I last gave this presentation, we remain with strongly bullish postures across the board, all four of these at least. How do I know that so quickly? Well, I can just see that the background color of the chart is that dark green shading right there. And as I explained on Tuesday, that occurs not only when you have a green line that is trending up between 20 and 80, but it also has to be above 50 at that point. If it's trending up between 20 and 80, but the green line is registering a number below 50, then we'd consider that more of a weakly bullish posture. But right now, we actually consider it strongly bullish across the board. And as you can see, it's been a really nice rebound since the lows here. So we're now only about 10% off of all-time highs, and that unfolded rather quickly. Remember, we were 20% off of all-time highs here at the dead lows of the market in late December. So a really nice snapback rally that we've been receiving here recently. At some point, you'd expect that we'd have a little bit of a pullback to determine whether we want to kind of establish a bottom to work off of, but right now it's been more of a kind of persistent upward trajectory. And so for those of you that held on firm through the rough patch in December, hopefully for those of you that are longer term oriented, I guess I should mention Jack Bogle as well. Thoughts and prayers, condolences to his family. A lot of folks have said that Jack has done more for the individual investor than any other person out there, and I couldn't necessarily disagree with that. He was an amazing man. Always focused on that long-term mentality and focused on not over-trading your account and that sort of kind of thought process there. So for those of you that were fortunate enough to hang on through the ugliest patch there in December, you've probably recovered a number of your gains at this point. If you're not made completely whole yet, then perhaps that's on the horizon. We'll just have to see. But for right now, what I can say is that according to the market forecast indicator and its view towards the intermediate term posture, it is strongly bullish across the board. Let's go ahead and just kind of give you a quick little rundown here. It's on the S&P 500, we were up 0.76 today. On the Dow, we were up 0.67 today. On the NASDAQ, we were up 0.71%. And then on the Russell, we were up 0.86% today. So not going to spend a lot of time kind of distinguishing between those because they were all kind of up about the same amount, right around that 0.75% that I mentioned in the intro. Let's go ahead and take a peek at our 3 green arrows setup now. This will be our next chart, 4C. And no surprise, since the markets haven't done anything but go up in the last couple of days, we remain with 3 green arrows on all 4 of these charts, just like we were on Tuesday. So again, that's a positive sign as well. Basically tells us price is above a 30-day moving average. Momentum is strong enough to have a zero crossover on the histogram for the MACD. And then, of course, stochastics are telling us that the bulls are in control over the bears right now in terms of upward price trajectory, and where in the range are we closing? Are we closing in the upper halves of the ranges or the lower halves of the ranges? So when we have strong stochastics data like we do right now, it suggests that we are closing near the tops of the ranges, and so that is generally perceived bullishly. So again, this is a decent time to be a trend trader. It's not perfect. You guys are aware that the moving averages of the charts still haven't turned around yet, because moving averages by their very nature are lagging, because of course, if you have a 30-day moving average, it's got to go back a full 30 days to make that average. So it does take a while to kind of turn around that ship. But if we don't have some sort of major breakdown in price action, I would have to believe that the moving averages in the coming days and weeks will likely start twisting their way higher as well, which will embolden bullish traders even further than they are right now. But it's a pretty strong environment, and thankfully so. Let's go ahead and take a look now at our 1040 crossover method. This is where we have a few more flies in the ointment. This is the longer term view, if you want to think of it from those terms, because each one of these charts represents 3 years in length. Each one of the candles represents 1 week in length. And the 1040 crossover method is using the 10 week exponential moving average plotted there in orange versus the 40-week exponential moving average plotted there in blue. And of course, since the orange line only tracks 10 periods of information, in this case 10 weeks, it's more sensitive than the blue line, and therefore the orange line will swing around further, or much more wildly, I guess you would say, than the blue line itself. And what we're looking for are those crossovers themselves. And so where we stand right now is, despite the really strong rally off of the lows, remember we're 10% above the of the lows at this point in just a month's time, but despite that very strong rally, all 4 of these charts continue to be perceived as bearish. Now, as I mentioned on Tuesday, we are starting to see some more positive elements toward that, even though we would still consider it more bearish from this particular vantage point. But the positive elements that I mentioned before, where you'll notice down below here on the MACD2 lines, remember, this is basically showing you in a different way the difference between these 2 moving averages up here. So when you're right at the 0 line, so remember that horizontal 0 line down there that's kind of colored in pink, that would be the equivalent of these 2 moving averages touching at that exact moment in time. And as that black line then falls further away from the 0 line there, it basically means that the more sensitive line here, the 10 week exponential moving average, is moving further away from the 40-week exponential moving average at a more rapid rate. So that's not necessarily a good sign if you want to be bullish. Now, when we start winding back around, like we've seen here in the last couple of weeks, notice that this is now curled higher here. That's a positive sign, because it is saying that, yes, it's true, the orange line is still below the blue line, but the orange line has now curled higher and is now, its trajectory is going back towards the blue line again, with maybe the hopes that it does cross over positively to the upside here in the coming months. Only time will tell on that, but at least you can kind of have that as a positive takeaway. But nonetheless, it is true, factually speaking, we do still have negative/bearish crossovers on the 1040 method on all 4 of our key indices there. Let's now take a look at our 12 grid analysis. This will be chart 4E. Each one of the backgrounds here will tell you whether we have a bullish intermediate posture using the market forecast indicator or a bearish intermediate posture using the market forecast. And so as you can see here, there's 3 pink charts on the board. Those are the bearish posture ones. All the rest are bullish posture. It shouldn't be a big surprise to learn that one of the bearish posture charts is the VIX. Most of you are aware that the VIX typically works inversely to the market at large. So when the stock market is in rally mode, like it has been recently, the VIX tends to struggle. The idea that fear is in the marketplace kind of falls by the wayside, and the animal spirits are alive and off and running and buying stocks again. So that one makes perfect sense there. You can also see why maybe the TLT would have a bearish posture right now. Remember, that's your U.S. government long bond. Oftentimes money kind of transitions from the bond market to the stock market or vice versa. So right now, with this being more of a risk-on environment, those that have money in their pockets are more willing willing to spend those on speculative stocks rather than U.S. government bonds. So keep that in the back of your mind. One thing I did want to point out here, because it will affect our mentality when we head towards our trade application example today, is down below here, gold remains bullish. I've been pointing that out for the last several times that I've been doing the market outlook presentation, and it's caught my attention because of its resilience, really. You can see that gold was one of the true winners of the market in late 2018. You'll notice here in the last couple of weeks of the year, I mean, gold was just ramping higher. And that was a bit peculiar in relationship to what was happening with other asset classes at that time. Remember, that was when the stock market was really getting annihilated. And so that can happen with gold. It doesn't have to, I should add, but it can, where when investors get a little queasy about stocks, they try to flee stocks and go to look for where they perceive to be some sort of a safe haven. And some of you have heard the term that gold is a store of value before. So it is true that in times that are a little bit more chaotic, sometimes the gold market can tick higher. So that aspect, I guess, seems to make some sense. Stock market was just spiraling out of control to the downside. Money was flooding then into the gold market. The more peculiar aspect of that is what has happened since then. Basically, where I'm kind of hovering my mouse right now, that is the crossover of the calendar. So that is where 2018 crossed over into 2019. And you can see that GLD, or in this case, /GC. So this is the futures contract for gold, but you can kind of get the same shape of the chart if you pull up GLD on your own. But anyway, at the beginning of the year, we were effectively exactly where we're trading right now. And, you know, times have changed, right? We were in a pretty bad spot from a stock market perspective at the end of 2018, and gold was in rally mode. So now that stocks have rallied 10% off of their lows, you might assume that gold would have given back a decent chunk of its gains. Yet that is not what has happened. Gold has remained resilient. And while it hasn't continued to go up at the same pace it was going up late last year, it hasn't given up those gains that it earned when the rest of the stock market was really fearful. Now the stock market's not all that fearful in comparison, but gold hasn't given up those gains. So it almost seems like the path of least resistance for gold continues to be to the upside. So I will focus our trade application on that here in just a little bit, but wanted you guys to recognize that in the chart right there. All right, let's take a look at our next 12 grid. In this case, it'll be the foreign stock markets 12 grid. And as we pull this up here, kind of the same background information you'll need to know. These are all 3-month charts, and the background color will tell you whether we have a bullish or bearish posture using the market forecast intermediate term line. Now, as we look at this right here, notice that we've got green charts on the board except for Japan and Germany. So those are the two areas that the market forecast would still consider to have a bearish posture right now. Some of you have heard that Deutsche Bank, as an example, over in Germany has really struggled here in recent months, and perhaps that's part of the reason there. Obviously, Germany is a very big car culture as well, an automotive hub, and you know there's a lot of distractions in that particular industry right now, whether you're talking about the trade wars and how they affect very heavy equipment like automobiles, but also the technological disruption, right? The idea that driverless cars are on their way, and what does that mean for car sales in the future? Do people even want to buy cars in the future if they can just call up a driver that's a driverless car, or I shouldn't say call up a driver, but call up a car through a Uber or Lyft, even if there's nobody driving you around, right? Now, that sounds like sci-fi, and it's probably a ways off, but nonetheless, that is the goal for a lot of people, whether you're in Silicon Valley or over in Germany developing those cars, and that sounds like an interesting thing for society and civilization, probably a good thing for our environment as well. But what we don't know yet is what does it mean for car sales? So, I'd have to believe they're thinking through those problems over there in Germany right now. But it is true that is one of the laggards from a global perspective right now. When it comes to the big winners, we've been kind of rattling them off in recent presentations. Brazil remains a big winner. It was up another 0.82% today, very close to 3-month highs. India is a very strong chart. I mentioned this one a couple of days ago. It was giving us a bearish posture, but I said, I wouldn't overthink that one because we were still right at that moving average at that time. And I thought it made sense that we could fairly easily see a bounce. Now, I didn't know that to be a fact, but that's just kind of, you go into any sort of a trade idea with a set of assumptions. And my set of assumptions there was, I recognize the bearish posture, but price being what it is, it does seem like it would be at an area where a bounce would be a reasonable expectation. And that is what we've received here in the last couple of days. So we have reverted that bearish posture on India back to bullish. And I still contend that's one of the better looking charts from a foreign perspective on the board. It's not quite as strong as Brazil was. You'll notice that the price action is still down here. We would still have to go up to here to get to 3-month highs. But it's the way markets have been trading recently, it could really get that taken care of in just a couple of days. So we're up there near a breakout zone. So keep your eye on India and the securities in India as well. Now notice Mexico remains pretty resilient. It was down today, so it was down 0.27, but it's still in a pretty nice upward trajectory there. Notice that moving average is green, telling us that price is above a rising moving average. And then the other one that I've been kind of pointing out lately is South Africa. And that will actually kind of weave its way into the conversation of our trade application example here tonight as well. Now, I was presenting for you guys here 2 days ago, so that would have been that candle, and I said, well, we're not quite to that breakout area yet, but keep your eye on it because, it could happen at any moment. Well, lo and behold, it happened the very next day. You'll notice that yesterday, South Africa did, on an intraday basis, break above this prior high over here that was set on November 7th. Now, today we did sell off a little bit, so I want to be upfront about that. We were down 0.93% on South Africa, so that's the bad part of the story. The good part of the story is we closed near the highs of the session. So this was a situation where it had gapped down to start the day and fought its way all the way back. And so we still remain pretty resilient there in South Africa as well. And as I mentioned on Tuesday, South Africa is, headquarters to a lot of gold mining companies as well. So you can kind of, think about that part of the story when it comes to South African securities as well. Let's now take a look at U.S. markets. Let's go here to 4G, and this is the U.S. markets 12 grid. Now, the only one on the board that has a bearish posture or a pink background chart is the utilities. Kind of mentioned the other day the impact that PG&E over in California has had on the utility space, but it's also true that market participants are seeking out risk right now. And when you're seeking out risk, you're not necessarily interested in the boring old utility space. And so right now we are starting to see the breakouts occur in other areas of the market, not necessarily with some of those more defensive areas of the market. So as you can see here today, the industrials were a big winner here today. I know when I looked earlier, Boeing was up big. I didn't see how it closed. Maybe I can check that out real quick. It was up pretty decently. It didn't close on its highs, but Boeing was up $7 per share today. It was up 2%. You can see that's a pretty good sized candle there for Boeing. And so Boeing has a big impact on XLI, which is the select sector spider that tracks the industrial sector in the S&P 500. And so Boeing is going to be one of the bigger players there. But of course, you can imagine that, if we get this story from the Wall Street Journal that, hey, the U.S. is thinking about, dropping those tariffs, that opens up that possibility that, hey, we're back to this free trade world type of environment. And when you're a big industrial manufacturer like a Boeing or a Caterpillar or a John Deere, that's music to your ears. That's what you want to hear. You don't want a bunch of restrictions when it comes to global trade. So anyway, I have a feeling that they benefited handsomely from that. Not to be outdone is their neighbor just to the right of them there. This is XLB in this case. This is your materials. Notice that materials were up 1.76, so just narrowly edging the industrials for kind of the best performing sector of the day. Now remember, gold mining stocks are part of the materials sector. They're a relatively small part of it. Gold mining has become a very niche part of the economy over the years, but nonetheless, that is where they house them. So again, I'll just mention that to tie it into our trade application example here in just a moment. Now, before we get to that, a reminder that if you are watching these videos, you could do us a favor by giving us a couple of clicks. After all, it does take a couple of hours to research what stocks we're going to trade and do the recordings, edit the recordings, send out the notifications. There's a lot that goes into this. And of course, we're not getting paid any direct advertising money or subscriptions from you to watch this video. And so what we do ask of you in return is just a few clicks. Right here, we make it as easy as possible for you on our website. So if you are watching this on our blog, remember you can do that by just clicking play right here. But directly below the video while you're watching it, if you're getting value out of it, obviously if you don't get any value, don't click anything. But if you are getting value out of it, make sure that you click like to let us know. And I appreciate the 86 people that did that for me on Tuesday. If you're on Facebook, feel free to click this logo here. That'll give you a chance to click thumbs up, I guess is what they call it on Facebook. And then on our website here at marketscholars.com, you can click this little heart down below here to let us know that you like it there as well. So again, we think that is a very small price to ask in return for the efforts that we put into these videos. And if you agree with us, we would appreciate you giving us those particular clicks right there. Also, I wanted to point out real quick that David has his technical analysis class coming up tomorrow. So that's every Friday at 11 a.m. Eastern Time. But then because we've got the Martin Luther King Jr. Day coming up with the holiday, the normal classes on the weekend and on Monday will not be held. But we'll get back into the flow of things on Tuesday with my dividend growth investing class at 11 a.m. Eastern Time. I'd invite you there for that. For those of you that are premium market scholars, remember Thursday is the day I do my question and answer session. So to give you a heads up as far as what sort of content we covered today, to see if you're interested in watching the recording, I had a conversation about some REITs. So that would be Simon Property and then Unibail over there in Europe. We also had a question on my drip tracker spreadsheet that I provide for my students here at Market Scholars. Had a question about Lazard as a possible dividend selection. Had another question about that trade I did the other night here in this video, which was Box. Had a question about Procter & Gamble and its controversy with its ad that's out right now. So if you want to hear my take, I kind of gave you, looks like about a 20-minute rundown on my thoughts on, what their obligations were as a profit-seeking organization when it comes to moral arguments about our society. So if you want to hear that, feel free to check out that portion of the video at about 1 hour and 10 minutes in. We also had a question on Medtronic. Had a question on, what sort of return should we be looking at when we're selling options. We had a question on Pattern Energy. We had a question on dividend reinvestment and how that affects your cost basis per share. And then we had a question on Helmerich and Payne and others. So feel free to check that out. That recording is now posted as well. All right, let's get into our trade application example for the day now. Back on over here to the Thinkorswim charts. I'm going to go ahead and pull up. Let's do chart 4A. Let's do 4A, just a simple one grid here showing the market forecast. The chart that I wanted to pull up was GFI. Now, for those of you that have been around the gold mining space for a while, you should be familiar with this one. This is Gold Fields, and this is a stock that's been around for a long time. I used to do quite a bit of gold mining trading myself, probably about 15 years ago, a long time ago. But nonetheless, this was one of the stocks that was around back then, and it continues to be around. Been mentioning in recent presentations that there's been a couple of really big mergers that have taken place within the gold mining space. We heard earlier this week about Newmont buying Goldcorp, and then we heard even prior to this week about the combination of Barrick Gold and Rand Gold. So, the gold mining space is dwindling, at least with the kind of upper tier players here, because they're consolidating. And Goldfields does have a good variety of acreage when it comes to mining. They are not a small company. I'm bringing that up because, by the way, this is a very low price stock, right? This is probably going to be the lowest price stock I ever talk about in these videos. This is a $3.72 stock, but I'm kind of pre-qualifying it to a degree to remind you that it is actually a substantial company. It's not a penny stock type of a gold mining company that you might assume with that low dollar amount. They have a long history of trading. In fact, if I came in here and went to an all-time chart, you can see that this chart goes all the way back to 1991 in this particular case. So this is not a fly-by-night type of an operation here. They've been around a long time, but they have been on hard times recently. There's no denying that. If we flip back on over here to the 3-month view, you can see that they've gone up very, very nicely in the last 3 months. But prior to that, if we looked at, let's say, a 1-year chart, it's still below where it was trading 1 year ago. So it kind of depends on your perspective on this situation here. We've got maybe a longer-term downtrend, but a shorter-term uptrend that we're dealing with. Now, as I looked at a lot of other gold mining companies out there, many of them did not have a bullish posture right now. So even though GLD does, right, if we were to pull up GLD, it has a bullish posture according to the market forecast. That's why we've got that green background color. But many of the gold mining stocks did not. And GFI was one of the few that did. In fact, it kind of gave us that bullish posture as of today, because yesterday it had a brief bearish posture as this green line dipped below 80 just for one day, and it's right back up there again today because this stock was up 3.6%. So this is kind of, a renewed uptrend, I guess you could say, as of today with that bullish posture. The other thing that I was going to mention is that this is based in South Africa, and so, some of that commentary that we've been noticing here recently regarding the strength just in general in South African securities could very well play its way through with this security as well. So what we're going to do, because it is a very speculative type of a trade, it's a $3 stock, or in this case closer to $4, but nonetheless a very low price security. So you have to understand that they can move around with a tremendous amount of volatility. I mean, losing 50% of your value if you're a $4 stock isn't unheard of. In fact, as we look at this chart, notice that we were trading at 263 on Halloween. And if I send the chart out a little bit longer again to a 1-year chart, looks like it would have been in September, it was down to 2.2. If I go back even further in time, let's look at a 3-year chart. Notice that it was also trading kind of around that range, 264 back here in December of 2016. And so what I thought we would do here today is a very basic trade, only 100 shares. So in other words, we're putting a whopping $372 into this stock idea, and we're willing to give up about half of our trade because we are going to take such a small position size. So in other words, I will look to get into this trade in paper money, place a stop order down here below one of these low areas, probably 262 or thereabouts. And so I'm willing to allow this stock to breathe quite a bit before being willing to get stopped out, because knowing that even if I did get stopped out down here, I would be only losing, let's call it $150 to $200, whatever it is. Some of you might say, well, geez, if you're only buying 100 shares, are you going to get any sort of upside potential? And that is debatable. Now, we don't assume that a stock that's a $4 stock will, light the world on fire and become a multi-bagger. But what I can tell you is that this particular stock has shown that ability in the past. Now, that doesn't guarantee anything about the future. But if we go back to that all-time chart, you'll notice that once upon a time, back here in 2006, this was about a $27 stock that is now worth less than $4. So again, I don't want to give you the wrong impression. I don't expect it to go to 27. But even if it could get up here to 10, let's say in the next couple of years, that still would be worthwhile from a percentage return perspective right there. So we're going to take it nice and easy, since I don't have any gold exposure in this particular paper account here yet, and just do 100 shares and keep our eye on the gold story. If gold continues to firm up as the weeks and the months roll on, perhaps we'll get into other gold mining ideas, and this will be just our dipping of our toes into the water. So in order to do that type of a trade, you can just right click on your chart, go down here to buy custom, choose with stop. And again, I'm just leaving this as 100 shares right here. And I'm going to put this order in. For some reason, after hours, they kind of give you, a crazy number there. But I will put this in at, let's call it 375. We'll give it 3 cents of upside wiggle room just in case it doesn't open exactly at 372 tomorrow. I will put that in as a good till cancel as well, and that way if it gaps up first thing tomorrow morning to 376 and it doesn't trade below that throughout the whole day, then I'd still have that opportunity to get filled in the coming days after that. And then our stop price, as I mentioned before, we'll just put that down there at about, let's call it $2.59. That would be a little bit below where it bottomed out back here, and if it did that, then clearly we'd be wrong, and we need to head for the exits and move on with our life with other trades. But until then, we'll give it plenty of wiggle room to work, and will represent a slight allocation towards an area of the market that we generally don't have that opportunity to. Because again, gold mining industry has become smaller and smaller as the years have gone on, so we just don't get a chance to talk about it a lot. And there are a lot of folks out there that believe that a certain percentage of your portfolio should be in gold-related assets because they tend to do a little bit better when the rest of the stock market is a bit more chaotic. So I am going to change that stop loss order to a good till cancel as well. Confirm and send, review that one last time. Everything looks fine there. We'll go ahead and send that in. All right, well, I want to thank you for joining me here tonight. Another fun day in the market as we saw another upside move. It's been a really strong bottom, or bounce off the bottom, I should say, here over the last month. So we remain bullish across the board. I want to wish you all the best with your trades and your investments. Since we're close to the weekend, I will say once again, go Rams, because it did help my team last week. So if we can beat the Saints this week, I'll be a happy camper. Anyway, I hope you enjoy football. Enjoy your final day of trading tomorrow. David will be with you tomorrow night in this video, and I'll see you guys next week. Take care, everybody. Bye-bye.